Well, it doesn't feel good when you're on the ground level of those interest rates.
It doesn't. I mean, that it's no surprise that home loan applications are down so much because interest rates are so high.
Good evening, YouTube. Thanks for tuning in to the ProfitDig Construction Show. I'm here with Jerry Work, Jeff Spencer. I'm Jeff Givens, and we've got Chris Work, producer Chris tonight, behind the camera. So, how are you guys doing today?
Good, how you doing?
Good, really
Doing
good.
all right. I think maybe we had a couple different topics we were thinking about covering tonight. What do you got there,
Yeah,
Jerry?
earlier I was just doing some research, just reading some industry news. I regularly read constructiondive.com. That's a good site if y'all are looking for just a general. It's really more big job, macroeconomic kind of stuff, but sometimes there's some interesting things on there. Anyway, one of the things I was reading is that home loan applications, I don't think this is surprising, are at their lowest level since 1995. This article further stated home building in September rebounded, but that probably reflects permits approved months earlier. And so now we've got interest rates that don't. I don't know what our Federal Reserve is doing. I don't know if Jerome Powell is evil or if he has some plan, but I mean, interest rates are going up still.
Well, it doesn't feel good when you're on the ground level of those interest rates.
It doesn't. I mean, that it's no surprise that home loan applications are down so much because interest rates are so high. So, Jeff, what do you think about this? Is there a coming problem ahead as fewer and fewer people apply for loans to build homes? Or
I mean, generally, yes. I mean, that's, in the grand scheme of things, that's generally a sign, that, it's production, is starting to come to a halt. And like we've talked in the past, a lot of times whenever you start seeing jobs come across your table, to bid in their apartment complexes, it's like people get fired up like, well, we can build some rental properties and people rather rent and ride out this 2 or 3, 4 year period, whatever it may be. And then whenever the economy gets back to normal, interest rates come down, then they want to focus on single family homes again.
I'm just not even sure that it's that. I mean, maybe that's part of it, but I mean, realistically, the population is declining, the amount of kids everyone's having, So, I mean, the long-term effect is I think we'll see less homes being sold, right? Well, but also the cost of living continuing to go up. It's difficult for someone to save up enough money to buy or build their own house or buy a house to then save money every month because the rental prices are well above the cost of whatever your mortgage is going to be.
Yeah. I mean, these days a house is what, $400,000, and then you need
in our area
15% put down. I mean, it's hard to save up $60,000.
Yeah,
certainly for a young,
especially when you're just struggling to get by.
Yeah. But I mean, it is kind of a trend that you see over and over in the construction industry. When times are good, everything's good. Whenever, things slow up, you see, just like subdivision work. Subdivision work kind of dictates, a lot about, the growth in your area. When subdivisions start to, as far as production, start to go down in a housing market, then, construction in general starts to come to a halt. Seems to be kind of the way it is in the industry, from what I've seen over the years. And they kind of go back and forth, like whenever single family home construction goes down, like we talked about earlier, the rental properties go up. I don't know, what the interest rate's going to do. I know some people I've talked to think that by next September, next August, they're going to kind of level off and start to come back down.
you figure they've got to.
Yeah, and and from what I've heard, we'll never see anything below 3%. We probably won't see anything in 3s anymore. A low interest rate's probably going to be in the low to mid 4s. It's going to be your new low interest rate. When the market does level out. And I think it's just a way, to kind of, for the Federal Reserve, to kind of control things, to kind of slow down our growth. To kind of, because, I mean, we were really heading for another 2007, 2008, 2009 era, to where money was easy to get. Banks were lending pretty easy, and I think we were, we still may be heading in that direction.
Well, the macroeconomic trouble now is that businesses can't even afford to borrow anymore. Lending has frozen up, and lending is like the lifeblood of an economy. That's what pushes currency into the economy.
Right.
And so I mean, these are difficult times. Well, so what advice would you give a contractor who, say, has been doing a lot of work in residential? I mean, do I need to start looking for more commercial, big job kind of stuff?
Yeah, always. I mean, you never want to have, we talked about this in the past, and you never want to have all your eggs in one basket. You want to have some variety, to where, you don't want to depend on this one area right here, to keep you going, because when this one area goes down, you got to have a backup plan. Mm-hmm. So it's good to be diverse, and have your work in multiple locations, multiple areas. Don't focus on just a single family home. Focus on some commercial projects. Some stuff. It hadn't got to be these big glamorous projects. I mean, there's a lot of small commercial projects out there too. If you're a smaller contractor, don't let the commercial industry scare you. There's a lot of small commercial work out there that goes on, from convenience stores to little shopping centers, strip malls, so on and so forth, that you may want to grow into and get bigger in that area. Mm-hmm, mm-hmm. But yeah, you definitely want to broaden your horizon and not be focused, just in one scope of work.
Well, because basically the same story. Dodge Construction Network put out a report that said year to date through September, total construction starts are down 3%, but the biggest drop is residential, down 17%. And it's got to be the interest rates.
Yeah. Yeah.
So I guess the point is you've got to be flexible and be able to pivot where the business is.
Mm-hmm. And I think it was, I can't remember the exact years it was, but it was in the 80s, best I remember. But our interest rates back then even got up to in the 20% range.
Yeah, the difference though is that our federal government didn't owe $32 trillion back then.
Yeah.
We've kind of our federal government has kind of dug us into a pretty bad hole.
I agree.
But anyway, I guess all a man can do is keep working.
Keep on pushing.
Yep. All right, y'all. We'll wrap this one up, gentlemen.
Yeah, thanks for tuning in. Appreciate you guys. Thanks, producer Chris. If you're looking for project bidding and costing software, check us out at ProfitDig.com. We are $99 a month per user. It's a steal to help you build your business.
That's no contract too.
Yep.
No contract.
If you don't like it, just cancel.
Yeah, and
give it a try.
we're not gonna make it a terrible process. Either way, we're always there to support you, right? So
please like and share the video. Tell your
Subscribe.
friends about us. Subscribe.
yeah. All right.
All right.
Thank you guys.
Thank you.
See y'all.